Hi, welcome to The View from Here. I'm Matt Driskill, live, sort of, in Singapore. That's right, we made a big move from Hong Kong, as I've been telling you for the last couple of years now, and we're now broadcasting live, sort of, from Singapore. Today we are continuing the FCC Speaker Series. We've got Joe Zhang, or Zhang. He's a corporate advisor, author. He's going to be talking about his latest book, Inside China's Shadow Banking. Is it the next subprime crisis? A little bit more about him in just a minute. Many of you know the FCC in Hong Kong. Many of you know it's a key stop on the itineraries of the most well-known people in the world who happen to be passing through the city. The View from Here is pleased to announce we've got the complete set of speeches dating all the way back to 2007, and we're uploading each and every speech from 2013 as fast as we can. Speakers and topics in the series include people like Mia Farrow, famous actress, outspoken activist on China and Darfur. We've got Bill Clinton in conversation with Lee Kuan Yew, the founder of modern-day Singapore. And we've got people like Chris Patton, the last governor of Hong Kong before it was handed back to China. We've also got people like comedian, author Michael Palin of Monty Python fame, and we've got many, many more. Check back frequently on The View from Here to get the latest podcast. Don't forget, you can also log on to iTunes and subscribe to The View from Here, and that way you won't miss a key speech. Just go to the iTunes store, do a search for me, Matt Driskill, or The View from Here, and subscribe, and that way each and every speech should be downloaded straight to your iPod, your iPhone, or your iPad. A little bit more about today's offering. According to the propaganda I've been handed, the topic, Inside China's Shadow Banking, the Next Subprime Crisis. The speaker, Joe Zhang, he's a corporate advisor, author, former head of China research at UBS, and he's a former chairman of Wansui Microcredit. Joe argues, is shadow banking in China likely to become the next source of the source of the next global financial crisis, or is it simply a little understood area of the enormous mainland economy? Using his new book as the basis, he talks about he's ready to pull back the curtain on the sector. He explains how shadow banking in China impacts regional and world economies. Within shadow banking, China's microcredit industry is an area of tremendous interest for most business analysts. And somebody just sent me an email there. Moving on, Joe will pinpoint areas of concern based on his experience in the field, as well as his knowledge of the complicated rules and regulations of banking in China gathered during his years as an official of the People's Bank of China. As I said, Joe is an independent corporate advisor based in Hong Kong. From 2011 to 2012, he was chairman of Wansui Microcredit Company in Guangzhou. Somebody sent me another email there. He was named a Microcredit Person of the Year in January 2012 by the Microcredit Association of China. Sounds like an interesting honor to me. Anyway, he's worked for 11 years at UBS, mainly as head of China research, and then deputy head of its China investment banking division. From 86 to 89, he was an official of the Central People's Bank of China in Beijing. From 2006 to 2008, he was the chief operating officer of Shenzhen Investment Limited, which is a property developer. Well, that's a view from here. That's it for me, Matt Driskill. Stay tuned. The topic, Inside China's Shadow Banking Industry. Is it the next subprime crisis? The speaker, Joe Zhang, he is next.
One of the pivotal architects of modern Hong Kong. Today, though, unless we'd actually managed to get Edward Snowden, it would be very difficult to have a more topical speaker than Joe Zhang. Joe is formerly with UBS, and then he transferred over to become a shadow banker. Joe's book, Inside China's Shadow Banking, the Next Subprime Crisis, was written in 10 days, and he was telling us he actually wrote it on a BlackBerry. So for all you budding authors, there's a pretty good tip there. Joe is obviously much in demand given the current crisis. So without further ado, I'm going to hand over to Joe to tell us, what does shadow banking tell us? Joe.
Thank you very much, Tim. Thank you, everybody. In April, I suddenly had a burning desire to write a book about shadow banking. In May, the book came out. Then in June, the central bank in Beijing started to promote the book. So the book is selling very well. Thank you very much. The book is about. The book has two parts. The first part is about my experience struggling as a banker in a fiercely competitive industry, and then I wanted a change. So I discovered shadow banking, microfinance. I was offered a job as chairman to run the business in Guangzhou, a part of a suburb of Guangzhou. And then, without thinking, I took the job. So the first part of the book is about my limited experience running a company and my interactions with regulators, commercial banks, my staff, IT issues, and so on. I used to work at the People's Bank of China as a regulatory official. That was in the 1980s. So I knew various regulatory people, the senior guys at various banks. I had the privilege of being able to knock on the door and call them and to lobby for this change and that change. Because my argument is this, like many research analysts in the equity market, the government's regulation on the shadow banking industry was overbearing, stifling. And I said, clearly there is a genuine demand for shadow banking. How much worse can the regulation go? So if I pick the timing now, I would make a killing when regulation improves. So that was my thinking. And then I went in, I lobbied at the highest level in the hierarchy. I went to see a chairman of CBRC. I went to see quite a few department heads at the People's Bank of China, CEOs of Merchants Bank, Minsen Bank, and ICBC Bank, and all those things. 2 years later, I discovered that regulation is still as tough as it was. This morning, I had a breakfast with a senior banker, and he was showing me some newspaper articles. And I said, I asked, do you really think what happened last week, the interbank market crisis, was because the PBOC wanted to crack down on shadow banking? He said, yes, that was the official line, but I don't believe anything of that. I said, why? He said, think about this. Broad money supply has been growing every month, has been growing at 16%, 17% over the previous year. Liquidity is plentiful. Therefore, and everybody says there is a cash squeeze. Where is the cash squeeze? There is no cash squeeze. And that was my view too. Liquidity was abundant. Money supply is still growing, even when the economy is relatively slack at the moment in the past 15 months and 18 months. Money supply has been growing at 16%. The recent May data, 15.8% on a year-on-year basis. And money supply numbers happen to be the most reliable statistics coming out of China. So he said, where is the cash crunch? I said, I don't understand this either. So his interpretation and mine too is that there are banks who don't bother to build a retail franchise, who relied just too heavily on the interbank market and on the central bank. Instead of using the central bank as the lender of last resort, they are using the central bank as the lender of first resort. Because it's so much cheaper and it's so straightforward to get money from the interbank, they are clearly lending too much. This is for some banks. But for the whole banking industry, his belief and mine too is that the central bank has been far too accommodative for far too long. And every time there is a slightest tightness of credit, the central bank comes in. And I joined the central bank as a junior regulatory official in '86. Since then, in these 27 years, China's broad money supply has been growing at 21.1%. 21.1%. And this is ridiculous. Even after growing for 3 decades at a high base. Money supply is still growing at 16, 17%. And of course, what happens in China is you grow credit, and then inflation ensues. When you have inflation, you need more credit to do the same amount of work because the commodity prices have grown, because material price has grown and the wages have grown. So inflation. Because of inflation, you need more money to do the same amount of activity. So the central bank accommodates, not only accommodates, but more than accommodate. Therefore, you put more money into the system, and then you have more inflation. When you have more inflation, you need more money to do the same amount of work. So that's the kind of iterative escalation of credit growth and inflation. And we have had this for far too long. Today, you have industrial overcapacity everywhere. You have the property bubble. The government says we are serious in cracking down the property bubble, in deflating the property bubble. Really? You have various administrative measures. But look at the interest rate. They just don't want to look at the interest rate. If they were to raise the interest rates by 1 or 2 percentage points, all the property bubble and all those administrative measures would have become redundant because the bubble will deflate. In the past, of course, 35 years, the government has the statistics on Chinese inflation, but those numbers are so discredited, and publicly in Chinese media and in policy circles, very few, if any, trusts government statistics on inflation. In a year or two, you manipulate statistics. In a year or two, you can't see the difference. Who knows? The government says the inflation this month is 5%. Okay, how can you argue with that 5%? You say, 5.3. How do you know? It's a guesstimate. So in the short term, nobody knows what these statistics, what the reliable, credible statistics really are. But in the 10-year period, 20-year period, 30-year period, things you can work out. And of course, that's how a lot of Chinese citizens have done. In my presentation, I'll go through my argument in the book and in my a lot of the Chinese essays I recently published regarding the recent shadow banking related crisis. Let me explain what we mean by shadow banking. Who are we? These are the so-called shadow bankers. 6,000 microcredit firms. These are licensed institutions. I manage one, and I invested in 2 others, one in Hubei and the other in Tianjin. I run this, and the Chinese bureaucracy is so bad that exactly 12 months after I resigned as chairman, and I am still chairman on paper, and I'm still the so-called legal representative. Just doing the paperwork would take this long. I don't know how long I will remain chairman for. More than 6,000 microcredit firms. These are licensed and they're supervised by local government finance departments. Rules are extremely stringent. And I think outside of China, inside of China, the argument about shadow banking is misplaced. The discussion people have on this shadow banking is really either the shadow banking has terrible quality of assets. They are going to cripple the system. The view I have is that shadow banking industry in terms of the asset quality is either better than the average bank loans or at par with average bank loans. You may say you're not saying very much. You're simply telling us that the bank loans are very bad. But I have reason to tell you, and I have confidence myself, having done this for 2 years and invested my own money, and I invested quite a lot of my own money in 3 microcredit firms, because these firms are privately owned by individuals who happen, in most cases, who happen to be the day-to-day managers. Therefore, we are using our money very carefully. And I have confidence to say the company has existed for 5 years now. The average loan quality is very good. We have a 3 to 4% bad loan ratio, and we have a return on equity of somewhere between 15 to 17%. Given the short duration of our loans, bad loans, if you made a bad loan, usually within a year or two, the bad loans should show up. But this company, we're not particularly good. I don't want to say, oh, this is the most outstanding microcredit firm. We're not. We're just a better run, one of the better run microcredit firms, and the delinquency is still below 5%. We have thousands of pawn shops. These are licensed by the police department, the commerce department. More than 10,000 guarantee companies. They have a 20-year history. Again, licensed institutions regulated by finance department. Consumer companies, consumer finance companies. There is a typo. Consumer finance companies, trust companies. This is a massive sector. Trust companies are very similar to Michael Milken's firm. What's the name? Lambert. Driskill Lambert. Very similar to that because we are arranged. Trust companies in China, the name is a misnomer. They don't do trust products. They are originators and organizers of junk bonds. The only difference is that these junk bonds are not traded. And these institutions are generally leveraged at 100 to 1. And I think if there were risks, this is one of the sectors there are some considerable risks. And then some P2P operators, peer-to-peer finance companies, they do a pretty good job. And thousands and hundreds of thousands of curbside lenders. And this is what the government says, these are illegal, worse than prostitution and so on. But these people, think about it, these are not small fries. And on one occasion in Guangzhou, where I worked, there was a land auction. Land auction, and of course, Chinese banks are not allowed to lend money to property developers to acquire land. Guess what? This developer approached a curbside lender. Curbside lender means they are not licensed, unlike us. But they have been running the business for 35 years, 30 years. After compound growth, 20-30% a year, year in, year out. These institutions, well, these are not institutions. These people are very considerable in terms of firepower. One curbside lender came up with 2 billion RMB for the developer to buy the land. And it was eye-opening for me. But I should know. When I was at the PBOC, I went to various places to monitor so-called black marketeers. And we, these days, the PBOC never doesn't do these things anymore because it was proven futile. Private equity investors, broker dealers. So these are the so-called shadow bankers. These are the shadow bankers. And of course, the two outstanding, well, the two types of firms stand out. One is my kind of microfinance, and the other is trust. And then finally, there is the so-called wealth management products within banks. How big is the shadow banking industry? These numbers are from S&P, and I think when statistics are guesstimates, very hazy, 10% plus, 10% minus are warranted. The point I'm making in the book is shadow banking in China is actually relatively small compared to the size of the economy, compared to the size of the banking industry. As I said earlier, I'm confident shadow banking is less risky than banks, than bank loans. And of course, in other countries, shadow banking includes bonds and derivatives, but bonds and derivatives in China are relatively small in significance. A little earlier, I talked about why Chinese statistics on inflation are discredited. This is my way of calculating the Chinese inflation in the long term. The Economist magazine used Big Mac index to gauge the overvaluation or undervaluation of various currencies. I use my own salary. When I was starting, my starting point is my own package when I was a junior officer at the central bank. Between 86 and 89, I was there. My monthly salary was 52 renminbi. And if I add medical coverage, the rental, and food subsidies and so on, my total compensation was 130 renminbi. This is the I was a high income earner at the time. As a chief staff member. My title was principal staff member. It was confusing. Not that I was any principal, but my title was principal staff member. In Chinese, it's 科长, 主任科员. So I was a junior officer there. My package was 130. Today, the same guy sitting in my cubicle would make about 11,000 renminbi. And some people put the number at 15. But let's use a low number, 11,000 renminbi. So that's a growth rate, compound growth 20.3%, compound, year in, year out, 85 times in 25 years. And of course, this guy's productivity is not growing that fast. Therefore, the gap, what's the gap? The gap is inflation. My argument is, this is my former colleagues and the colleagues refuted this. I argue that hiring a civil servant like me is no different from buying a bus ticket because that's a consumer item. There was a derivation, academic kind of exercise. I came down to a CPI inflation of something between 5% to 10% to be roughly right, better than precisely wrong. We think inflation is that. Today, the average cost of funding for Chinese banks is 2%. Average cost of funding deposit on Chinese deposits is 2%. And the average prime rate, is 6%. A lot of SOEs borrow at less than 6%. So in other words, interest rates are either negative or too low. And that explains the two phenomena. One is, everybody says the government is very tough on the property sector. Why is property bubble so hard to crack? The second thing, of course, is, and in my former investment banking industry, everybody says the Chinese stock market appears so attractive and rapid GDP growth. But since I came to Hong Kong as a research analyst 19 years ago, the Chinese stock market has been deflating since 19 years ago. And people say GDP growth is decent, 80%, 9%, 7%, whatever the statistical manipulation. There is no debate. China has been growing rapidly. How come the stock market doesn't perform? I think there is a reason. I'll talk about this briefly. I'm using Warren Buffett's presentation recently. Not recently, some time ago. Warren Buffett says, in the short term, there are too many variables on the stock market. In the long term, there is only one variable, which is inflation, or in other words, which is interest rate. And he split the he split the U.S. Stock market history into two 17-year periods. One is between 64 to 81. The second 17-year period is 81 to 98. He argued that, look at the first 17-year period, the Dow Jones Industrial Average hardly changed. The second 17 years, the Dow Jones Industrial Average rose more than tenfold. And then Warren Buffett asked the question, is that because of GDP growth differential? He said, no. In the first 17 years, GNP rose 373%. In the second 17-year period where stock market performed massively, GNP only grew 177%. So he said, this is counterintuitive. Is stock market performance negatively correlated to GDP growth, GNP growth? Of course, that's not the answer. The answer, he says, is this. Is inflation or interest rate. In the first 17 years, inflation was too high. Interest rates were too high. In the first 17 years, particularly since Paul Volcker's becoming chairman of the Federal Reserve, he cracked the spine of inflation, and the stock market performed. Now, if I were to use this analysis on the Chinese stock market, yes, GDP in the past 20 years has been very good, but inflation is significantly higher than the official statistics. And don't use the bank interest rate numbers. Use the numbers we generate from shadow banking. And we lend at 25% a year. That's the annualized rate we charge. So microfinance companies, we charge 25%, not just one company. This is the regulatory ceiling. So we charge 25%, 4 times the prime. And pawn shops charge 35%. Many operators in our industry charge significantly higher, far above the regulatory ceiling. They get away with it because they dress it up as a service charge, admin charge, or you pay interest up front. And there are so many ways to effectively increase your effective interest rate without violating the regulation. And that, my view is, that kind of rates are the so-called market rates. Why are we able to charge that kind of high rates? Because of underlying inflation, because of the squandering of financial resources by the formal banking industry. The state-owned companies and the privileged, well-connected private sector companies consume far too much credit, therefore leaving very little to the SMEs. Therefore, they are desperate and we can charge more. And I think if the central bank were to get the recent crisis, read the recent crisis correctly, they should ask this question. As the government, we are very negative, we are hostile on the shadow banking industry. But why is the industry growing so rapidly? Why? Because of several reasons. One, there is underlying inflation which is significant, and the consumers, savers, want a better deal. So that's why, paying them 2% annualized interest rate is simply not good enough, and they want a better deal. Two, SMEs starved of finance. They want to have access to credit, even though at the shadow banking industry they pay significantly higher interest rate, but it's better than having no access to credit. So that's the demand. So there is supply and there is demand. And then, of course, there are middlemen, ambitious middlemen like myself, who are enthusiastic about working in the industry. So I think the message the central bank should learn from the recent episode is this. But unfortunately, they are, because of the recent crisis, the last week, I think the regulators, CBRC, PBOC, and all these institutions will become even more hostile to the industry, to the shadow banking industry. I wrote a few essays in the Chinese media recently to argue, in fact, 4 weeks ago, I argued very strongly that the PBOC should raise interest rates instead of lowering interest rates. But of course, before the PBOC had time to do anything about it, the market did it. This morning, I got a call from my hometown in central Hubei province. The wealth management products, even at ICBC, the rates are over 1 percentage point above the rates they offered just a few weeks ago. So clearly, that is putting pressure on the banks. You know, the rates you offer are not realistic. So that's my brief introduction. I look forward to your questions.
Thank you very much, Joe. We'll now throw open for about 15 minutes of questions. If you have got a question, please raise your hand. One of our staff will come bring you a microphone, if you could just announce who you are and who you work for. And at the close of this question time, Joe will be signing copies of his book, which he informs me is currently the best-selling business book on Amazon. First question here. Yep, right.
Hello, yeah, Jeff Galbraith of Haitong Securities. We met before. Can you go back to your first slide about who the shadow banking members are?
Okay.
I just have a simple question. Where's their source of funding for these different companies?
Okay. Microfinance companies, usually we have above 10 shareholders in each firm. The money is from the shareholders. We borrow up to 50% of the equity. In my firm, we have 150 million RMB of capital, and then CDB, China Development Bank, lend 75% for long term to us. And the others, pawn shops, they have, on average 100 million in equity and 100 million from banks. So their gearing ratio is 1 to 1. Guarantee companies, they can borrow up to 10 times the equity capital. So they are privileged. Consumer finance companies, they can borrow up to 4 times the equity. Trust companies, very high gearing ratio, as I said. And the P2P operators, they run operate on their own equity. Curbside lenders, out of pocket.
Next, just behind.
Hi, I'm Peter Thalmarson from Reuters Breaking Views. You didn't talk very much about wealth management products, which is, I think, the thing that people are most worried about when they talk about shadow banking in China, particularly because these are products that appear to have been sold through banks, are viewed by many customers as like deposits, but offer a much higher rate and may not get paid back. I just wonder what you think about when you talk about sort of shadow banking as in a collective sense being as safe or safer than the banks. What you particularly think about the sort of the risks in those products?
Okay, thank you. Well, I personally buy wealth management products. I roll them over and again. Many people do. My family, my extended family in Hubei province, they do that as well. The way I read wealth management products is this. Banks' average cost of funding on deposit is 2%. This is publicized. So many banks are listed, so we have that data. But why do they offer 4% or 4.5%, recently 5.5%? Why do they shoot themselves in the foot? Why offer more? Because they have to offer more. If they don't offer more, that portion of the money will flee, will go to us. So we will have more shareholders, we will recapitalize our microfinance companies. So it is their way of keeping the deposit. This is actually no different from the money market funds. The reason behind the money market funds in the US in the 80s, if you don't offer high rates, then the money will go. Even at 4%, then they lend out at 9%. So it's a parallel upward shift of the spread for the banks. 2% rate, they charge 6%. That's 2% on deposit, they charge 6%. 4% on the wealth management products, they charge 9%. So it's a parallel upward shift of the cost curve. In terms of risk, it's dangerous to generalize, but I believe, having worked on some products, in the book I talked about some sneaky transactions I was almost associated with. I believe, in terms of the risk profile, it is either at par with bank loans or slightly better. Very few people would agree with me, but I've done this and I believe that. But you can say, which means bank loans are terrible. Draw your own conclusion, but because really banks know this very well. They are not off the hook after they sell this product. As we have seen in Lehman Brothers mini bonds in Hong Kong. This is a free market. You signed on the dotted line. This this mini bond was sold on behalf of Lehman Brothers. And we Bank of China, DBS, we're not responsible. You signed, but somebody will turn around and say you missold. Chinese public generally, even my parents, they never went to school. They know that this is different. But how different they don't know, but they know it's different. And of course, many people who went to school, had education, they pretend not to know. If the salesman were to sell this product to them and say, look, read this article number 5. This is not ICBC risk, not ABC risk. They say, oh, okay, fine. But when something comes up, if 50 people stand in front of the city government protesting, and then the ICBC or any bank president will get a telephone call, and then you foot the bill. So the risk is, in my view, a little better than loans, or at par. Does that answer your question? Thank you.
Over there.
Jimmy Chang. So where do the money goes? I mean, it's not difficult to lend money at double digit, but for those that borrow at double digit,
right,
are they spending money on the Gucci bag, on property,
right,
or
okay,
some kind of good business
sure,
that generate that kind of return?
Sure. We're no different from private equity people, hedge funds people who do these things. Private equity people charge the so-called IRR, internal rate of return, normally 25% plus. We're the same. We lend to companies, just about everybody, restaurant owners, barbers, shop owners, plantation owners, taxi drivers, florists, and really just about tea houses, everybody. And of course, our rates are high, and we always say, because they are relatively short-term in duration, 6 months, 3 months, and they need that. Of course, these companies have to be very efficient, and there are so many small businesses who sacrifice their hours and the sweat. They work hard, and their returns are good. They're poor, but they're just, for various reasons, they are small in size, but their ROE is high. We typically charge 2% a month. If you use the money for a month to stock up something, to use it as working capital, 2% is probably okay. Think about bank loans. Bank loans, annualized rate, 7%, 6%, sounds cheap. But when you have to fill out so many forms, and you as a small businessman, you don't know which department to approach, and then the long waiting period, sometimes as long as 2 or 3 months. And then occasionally you have to go and dance with those guys and play golf, and all that is so stressful and costly. So, I'm biased. Let me be upfront. But I heard quite a lot of people tell me, our customers, and they say, yeah, but you do charge more, but we don't pay for the full year. And it is so straightforward. We come in, you as chairman, you see us, and we were equal. You make a decision in 2 days. At the end of the day, I think your cost is just about the same as the banking rates. Again, I'm biased.
Lady on table 2 here.
Well, first, I find your presentation absolutely fascinating, really wonderful. My question is, you made the statement that the risk of your types of microcredit lending, of shadow banking generally, is lower than the risk of bank lending. And my question is that because of the quality of the lender or the quality of the borrowers?
Thank you. Several reasons. One is we are using our own money, so we use it carefully. So that's number one. Number two, our leverage, the whole industry, shadow banking industry as a whole, the leverage is so low. Number two. Number three, this shadow banking industry as a proportion of the economy and as a ratio to the overall banking industry is low. 40-something% is relatively low. There is a tremendous amount of potential for us to grow without hurting the banking industry. Yes, of course, we are undermining the banks. We are. Slowly, we are undermining the banks. But, when you are relatively small, you can pick and choose. You can pick and choose, you cherry pick on your customers. But when you give me suddenly you give me 5 billion, what do? I go from prime loans or better loans to ordinary loans to subprime and to silly loans. And when I have too much money to deploy, unknowingly, I lower my standards. And that's what happened in the US subprime. And the US bankers, of course, they didn't deliberately go to somebody, some bankrupt guy and say, hey, I want to lend $50 million to you. And then they continue to convince themselves, this is okay, not too bad. And that one is okay too. But after you exhausted all the better opportunities, and then you suddenly discover that you are doing subprime without knowing.
Just front here, please.
Hello. My name is Kevin. I'm from FCCHK Bank. As a banker myself, right? I would like to know your approving procedures for those loans.
Okay.
And also, sorry, and also like in Hong Kong, right? We have a centralized like credit bureau like TU, CCRA, but like in China, so I don't think there's a central credit bureau. So how do you like overcome all the risks?
There is a central credit bureau at the People's Bank of China. We as shadow bankers, we don't have the privilege to access the data. That's unfortunate. And I think the central bank, as the government, they should open it up to us, to these licensed institutions. But of course, good things don't always get done in China. So that's one. The other thing is in terms of approval procedure. Again, I don't want to generalize. Some companies are better governed. They have a standard procedure. We have marketing people go and distribute brochures, doing cold calls, and then the application comes in. They don't write on a piece of paper, of course. They come in with slippers and T-shirts. They come in and say, hey, I want 50,000 RMB in 2 days. And of course, I give him a good stare and see if he's up to standards. I give him a good stare and ask a few questions. It's no science. Of course, if I were raising funds or doing IPO, I would give you a flashy kind of presentation, a PowerPoint, and talking about this metric and that metric. But I'm telling you, and a very good stare and a few tough questions are what it takes.
Just time, I think, we wrap the other out. In the far corner, over there.
Michael Knock, I work for myself. Joe, we saw after the crisis in 2008, China panic and reflate its economy by expanding its money supply, even at a greater rate than we've seen elsewhere in the world. And of course, what that brings with it is a massive misallocation of capital, which manifests itself with problems in the banking system. Are we at the point where that is about to unwind, and what is your prognosis going forward in terms of where we are today? Is this the beginning of a much bigger crisis? I'd just like to hear your perspective.
My book is not sensational. It's actually a very cool-hearted kind of reflection of my experience in the past 2 years. I don't think this banking crisis, I don't think there is a banking crisis to talk about at the moment. The banking sector is okay. The banking sector is fine. It can go on like this for, who knows, many years without a Lehman Brothers kind of thing. But there are considerable issues. The issues are financial repression. And financial repression, which means negative real interest rates, that means misallocation of resources, that means worsening inequality, because different people have different access to finance. It also means that as a country, as a lender or any lender, you live in the comfort that your loans are okay. In fact, your loans are not okay because when interest rates are so low, lending rate so low, of course, even mediocre projects appear feasible. They are feasible because your rates are wrong. Your price is wrong. I think that's a problem. So at some point, and of course the other thing is because of regulated interest rates, because of negative real interest rates, loan demand is very strong, always strong. The appetite for loans is very strong. And, it's an escalation. More loans, more inflation, more loans, more inflation. And of course, sensible lending opportunities are not growing by 15%, 17% year in, year out in this country or anywhere in the world. Therefore, we go from prime to ordinary to subprime to silly loans. And that, yes, we are in that direction. We are moving, China is moving in that direction. But I think the distance is still reasonable. There is quite a bit of buffer.
Just time for one more, and then we're going to wrap up.
Hi, Peter.
Peter Churchhouse, Asia Hard Assets Report. Joe, great presentation. Thanks very much. One very quick question. We've got 23 trillion RMB estimated within the entire shadow banking system. If you had to make a stab or a guess at it, what would you say is the sector breakdown of that lending, by sector,
okay.
Just in very rough terms?
Yes, okay. The first one is 1 trillion. The micro-credit firms, this is about 1 trillion. I was actually honored as micro-credit person of the year last year. And not that I deserved it. So that's 1 trillion. Pawn shops, 500 billion. Then guarantee companies, that's probably 2 or 3 trillion.
No, I'm asking, where does the money go? 23 trillion.
Ah, I see.
Where's it going?
Okay. The sectors, the biggest, of course, is real estate, sadly. And then a lot of mining companies. And, people don't talk, we talk about the real estate problem, the local government financing platforms, and mining companies. So many people lend, and everybody suddenly becomes a mining expert. They know aluminium, and they know and this ingot. 5 years ago, we never heard of those terms, but,
Okay, thanks very much. Joe, I think entertaining and incredibly informative. Thank you very much behalf of the FCC and all our guests. We always like people to leave with a memento from your visit here. So, Joe, thank you very much. Thanks very much.